the 14th of May 2021, Naira fell to a record low against the dollar at the official rate.
Then the value of the Naira at the parallel market dropped from...
The official tender, the Naira has been losing value against the dollar and other global currencies.
Today, the Naira is experiencing unsettling turbulence and its value is falling.
On that day, $1 exchanged for 419 Naira 75 kobo at the foreign exchange market. Analysts blamed this fall of the Naira on the multiple currency regime policy of the federal government and predicted that the devaluation is aimed at unifying the various exchange rates. In reality though, anybody who cared to read in between the lines will find that this fall in the value of the Naira followed a pattern of perpetual decline of the currency since the 1980s. In 1980, $1 was equal to 54 kobo in 1980. Now fast forward to 2022, the same $1 is equal to 416 Naira at the official rate. So at the parallel market, it is much higher than 416 Naira. So within the space of 4 decades, Naira has completely crumbled relative to dollar.
The central bank is making desperate efforts to stabilize the Naira.
Being a heavily import-dependent economy, revenues from export dropped.
Hello guys, my name is Emmanuel, and today I want to talk about 7 reasons why Naira, which is the official currency of Nigeria, continues to depreciate despite the fact that oil prices have increased significantly this year. And also I'll be telling you how to preserve your wealth even as Naira continues to depreciate. So without any waste of time, let's get into it. But before I begin, I want to first explain 2 concepts so you know how to use them and when to use them so you don't use them interchangeably. The first is currency devaluation and the second is currency depreciation. Currency devaluation is an act of reducing the value of a currency intentionally by a government or a central bank. While currency depreciation, on the other hand, is the reduction in the value of a currency without government intervention or CBN intervention. So one of them is intentional, which is the devaluation, while the other just happens. Now, currency devaluation happens in a fixed exchange rate regime. There is something called exchange rate. Exchange rate is a value at which one currency can be exchanged for another currency. It's like the price of getting another currency. So if there are 2 currencies, say Naira and dollar, then exchange rate of Naira to dollar will be the amount of Naira you have to give up to get $1. So there are basically 3 types of exchange rates. There's the fixed exchange rate, there's the floating exchange rate, and then there's a mixed exchange rate. So a fixed exchange rate is the kind of exchange rate that you get in a fixed exchange rate regime. What that simply means is that the government or the central bank of the country that has this particular currency determines the value at which that currency can be exchanged for other currencies. In a fixed exchange rate regime, the price of the currency or the exchange rate of the currency is pegged against another currency or a basket of currencies. It can be a group of currencies. For example, we have Kuwait, which has the Kuwait dinar, which is the strongest currency in the world actually. It's pegged against a basket of currencies. These currencies are not known, but they operate a fixed exchange rate regime and their currency is pegged against a basket of currencies. On the other hand, we have the floating exchange rate regime. And this is the exchange rate that is adopted by countries that want their currency to be freely floating. What this simply means is that the forces of demand and supply determine the price at which that currency can be exchanged for other currencies. For example, the US dollar is a floating exchange rate currency. So what that means is that when you come to the forex market, the forces of demand and supply will be the determinant of the value of the dollar at any point in time. And then lastly, we have the mixed exchange rate regime. This simply means that at some point in time, the currency is fixed, while at other points, it is floating. This is the exchange rate regime that is operated by Nigeria. So that's why you find that sometimes the Naira is allowed to float against other currencies, for example, dollar, while at other times it needs help. So the CBN has to step in and fix the exchange rate of the Naira, otherwise it loses so much value. So there's it. And since we've gotten that category, then let's proceed. So the first reason why Naira has been depreciating perpetually is the balance of payment position of Nigeria. Now, the balance of payment is an account that shows a lot of things about a country. It shows the exports, the imports, the financial accounts, even shows the debt and all that. But today I want to focus on the exports and imports of Nigeria and how they've been constructed so much so that they continuously depreciate the currency of Nigeria. Now, the export of a country is all goods or services that leave the country, while the import, on the other hand, is every goods or services that comes into the country. When a country exports her product or service, it gets paid an amount. So when you export, money comes into the country, while on the other hand, when a country imports, money goes out of the country. So in exporting and importing, there is demand and supply of currencies. First of all, there's a currency market known as a forex, where you can go to either buy a currency or sell the currency. Now, when you want to export a goods to another country, the buyers of that goods in that other country would have to exchange their currency for your currency in order to buy your goods. So they have to pay you in your own currency. So in other words, when you're exporting, the demand for your currency is increasing. While on the other hand, when you are importing, the demand for your currency is reducing because there's more supply. You have to supply your currency to another currency or change your currency into another currency in order to import goods. So the implication of this is that exportation increases the value of a currency because it increases the demand of the currency. While importation, on the other hand, reduces the value of the home currency against the foreign currency because it increases the supply of the home currency and at the same time increases the demand for the foreign currency. So you can say that export is good for your local currency while import is bad for your currency. So in other words, for a country's currency to appreciate or to improve in terms of imports and exports, then the export of that country should be significant, should be higher than the import of the country for the currency to appreciate. So since we're talking about Nigeria now, and I remember I told you that Nigeria operates a mixed currency regime. So Nigeria's currency can either be pegged or it can be floating. So for Nigeria's currency to appreciate, Nigerians will have to be exporting more than they import. But what actually is the case? So here's a picture of Nigeria's balance of trade from 2016 to 2021. Now the balance of trade is the difference between the total exports of Nigeria to our total imports. As you can see, from 2020 through to 2021, the BOT is negative, which shows that we have been importing more than we have been exporting. For example, in 2020, we exported 12.5 trillion naira worth of goods, while at the same time we imported 19.8 trillion naira worth of goods, which left us with a trade deficit of 7.3 3 trillion naira. So far in 2022, we have exported 5,767 million naira worth of goods, while at the same time we have imported 5,941 million naira worth of goods, leaving us with a trade deficit of 174 million naira. So Nigeria's imports has consistently exceeded her exports. And so for this reason, the naira has continued to depreciate because the demand for dollar has exceeded the supply of dollar in the country. Also remember that the balance of payment includes services. So for example, you have a country like Cuba, which is the world's largest exporter of doctors. They export doctors and they make money from it. Like it becomes a revenue, serves as a revenue to the country. We're not exporting enough. We're not exporting enough goods. We're not exporting enough services. So as soon as we start exporting enough goods and services, our currency will start to recover. Also, when you look at our exports, you'd find that our exports is heavily dependent on oil, crude oil actually, because we import about 90-something% of our refined oil. So our export is dominated by crude oil. Can't even refine it. So of course I wouldn't say that the over dependence on crude oil exports is the reason why our currency is depreciating. I can't say that. It could be a factor. I mean, it's not good. It means we're not diversified enough, so it could be a factor, but it can't be the major factor. For example, there's a country like Kuwait, which has the strongest currency in the world, the Kuwait dinar. Their economy is still heavily dependent on oil revenue. They're also very dependent on oil exports, but it obviously doesn't affect their currency. So we could be doing more. The country obviously needs to be more diversified. The economy needs to be more diversified. We could take advantage of the fertile soil, agriculture, make our exports more service-based. So we don't have to always produce. Even if we can't produce, let's offer a service. Let's do something. I mean, Nigeria is the only OPEC member. OPEC is the Organization of Petroleum Exporting Countries. I think it has about 13 members. So Nigeria is the only member of OPEC that still imports over 90% of her refined oil. That's serious stuff. So what we'll do is we export crude oil and we import over 90% of our refined oil. The other countries import only about 20% of their refined oils, and Nigeria is the only member that imports over 90%. So we could improve in that aspect. So recently there's the Dangote refinery, which is currently being built and should be functional by the fourth quarter of 2022, this particular year. So let's hope that the refinery can help us to alleviate this problem of over-importation of refined oil. So it could also improve our balance of payment position actually, and allow us to have a more stable currency. The number 2 factor that is affecting the value of Naira is what is called inflation rate. Now, inflation is a persistent increase in the general price level. So when you find that in an economy, there is sort of a persistent increase in prices, not a sudden increase, but a persistent over time, you find that there's been increase in prices, like we're experiencing in Nigeria, then you can say that there is inflation. In Nigeria, the rate of inflation is somewhere around 15.7%. So far in 2022, it is 15.7%. That is just too high for the country. Usually, countries aim for single-digit inflation rates. So when you have double digits, it's too high inflation. even for the single. For instance, in the United States, I think earlier in the year they had about 4% inflation rate, and everybody was freaking out that it was too high and everything. And yet, consistently in Nigeria, we've had double-digit inflation rates. So something has to be done about it, because inflation easily erodes the value of a currency. So the inflation we're having in Nigeria is way too high, and it's partly responsible for the persistent drop or depreciation in the Naira. So once the government can look for a solution to this, then the Naira will start to improve, start to recover. The third factor is the interest rate. Now, generally, the higher the interest rate of a country, of an economy, the stronger the currency of that country. And the lower the interest rate of the country, the weaker the currency of that country. So interest rate is the benefit you get for parting with a portion of your capital. So when you give someone money, when you lend someone money, they pay you interest on that loan. So interest rate is the value you get for parting with your money. Now, generally, commercial banks are responsible for giving out loans. So what they get in return for giving out loans is interest. In Nigeria, the interest rate is determined by the monetary policy rate, the MPR. Now, the monetary policy rate is the rate at which the Central Bank of Nigeria gives out loans to the commercial banks in Nigeria. Now, this MPR directly determines the interest rate at which the commercial banks will in turn give out loans to individuals and companies in Nigeria. So generally, when the Central Bank of Nigeria wants to increase the interest rate in the economy so as to strengthen the currency or to reduce inflationary pressures in the economy, what it does is to increase the MPR rate. And the commercial banks will in turn increase their interest rates. On the other hand, when there's inflation in the economy and the central bank wants to withdraw some money, generally it is believed that the higher the money in circulation in an economy, the higher the inflation rate, and the lower the money in circulation in an economy, the lower the inflation rate. So when the CBN, which is the Central Bank of Nigeria, wants to reduce the inflation in the economy, what it does is to increase the MPR rate, and that will in turn increase the interest rate at which commercial banks give loans to their customers. On the other hand, when the CBN wants to boost the economy, what it does is to reduce the monetary policy rate, and the banks in turn will reduce interest rate at which loans are given to their customers. And what it does is to fast track the economy. What this does is to boost economic activities in that country. But then the negative part of it is that it affects the value of the currency. So it reduces the value of the currency because there will be too much money in circulation. The fourth factor that has led to the depreciation of Naira is Nigeria's general economic performance. Now, when I talk about economic performance, what I mean is the general economic welfare of Nigeria. So I'm talking about things like how diversified is the economy of Nigeria? How diversified is Nigeria's exports? Also, what is the unemployment rate? For example, in Nigeria, the unemployment rate is currently more than 33%. That is way too high. That is way too high, and it's affecting the currency. Also, we have the youth unemployment rate, which is over 40%. That is also very high, and it's also affecting the currency. Now, if Nigeria can afford to be more diversified, it will generally mean that there will be more goods and services available for exports. And the more goods and services we have available for exports, the more money we'll make from exports. Also, there's the ease of doing business. How easy is it for Nigerians to do business. So if government can improve on these things, we'll find that there will be more economic activity in the country. There will be a better economic performance of the country. Also, the government is responsible for creating policies that are favorable to businesses, both for establishing them and for running them. So government should make policies available that will allow people to create more businesses. Because when we talk about unemployment, the best way to solve the issue of unemployment is to create jobs. And the best way to create jobs is to create businesses. So the more businesses are in the economy, the more jobs will be in the economy, and the lower the unemployment rate will be. So you can see that this is not only left for the government. Now the government will make policies available that are favorable to businesses, but then individuals, private individuals, will have to take the initiative to establish businesses so as to employ Nigerians and reduce the unemployment rate. And in the long run, this will have a favorable effect on the currency, on the value of Naira, to make it stronger, because we'll have more economic activities in the economy, we'll have more goods and services being produced and that are exportable, and in turn, our currency will be stronger. Another factor that's affecting the value of Naira is public debt. Public debt is simply government debt or government borrowings, whether within the country or outside the country. Now, the higher the government debt, the lower the value of the domestic currency. In Nigeria, for example, the government debt has been increasing exponentially. In fact, it is forecasted that by the end of 2022, by the fourth quarter of 2022, the public debt would have increased to 50 trillion naira. Now, I can't say that that's too high or that's too low, because there are countries with far more public debt. For example, the US, which is one of the countries with the highest amount of public debt, still has a stable currency. So, public debt affects the currency together with other factors, but generally, the higher the public debt, the lower the value of the currency. Why? Because public debt relates to fiscal policy. Fiscal policy simply tells you the revenue and expenditure of government as well as the borrowing. So when the expenditure of government is higher than the revenue of government, then government has to resort to borrowing in order to close that gap. And when they borrow, all this money are spent inside the economy. So they simply make too much money available in the economy, and thus, like I've already said before, when there's too much money available in the economy, it leads to inflation, which directly reduces the value of a currency. The next factor is the terms of trade. Now, the terms of trade is the ratio of the price of a country's exports to the price of our imports. Now, the higher the value of the terms of trade, the better for the country and the stronger the currency of that country, because it will simply mean that the country is charging a higher price for exports than it is being charged for imports. In the case of Nigeria, the opposite is the case. In Nigeria, we're paying a higher price for imports than we're being paid for exports, and that is affecting the value of our currency, because more money is going out of the country than is coming into the country. It is depreciating the value of the country's currency. The last factor is political stability. Now, I think this is obvious. The more stable politically a country is, the more it is able to attract foreign investors, the more it encourages local investors and businesses, and generally the more the economic and business activities in that country, which directly improves the value of the currency. In Nigeria, for example, we've been consistently plagued by insecurity issues. So in the north, we've had Boko Haram, and currently we're having bandits and all that, kidnappings. In the east, there's been agitations and rioting and all that. In the south, there's been the militant disturbing, and all over the country there's been one political instability or the other, one insecurity or the other. And all these, frankly, are discouraging international investments in the country. They're discouraging foreign direct investments, and they're discouraging foreign portfolio investments. And all these things help bring in more money into the country, which in turn stabilizes the currency. So as soon as we can figure out how to fix these issues, these insecurity issues, then our currency will start to improve. And now to what you can actually do to preserve your wealth despite the persistent depreciation we've been experiencing in Nigeria. So the answer to that is simple: earn dollars. Now, I've said foreign currency, but generally dollar is like a standard of foreign currencies. In Nigeria, dollar is like our major forex reserve. It's our major foreign exchange reserve. So my answer to that question is earn more dollars. And in my opinion, there are 5 basic ways through which you can actually earn dollar. Number 1 is for you to earn dollar through your salary or wages, or you can earn dollar through profit from a business. Number 3, you can earn dollar through rent. And number 4, you can earn dollars through interest on your capital. And lastly, you can earn dollar as a dividend. So let's start from number 1. Now, how do you earn dollar through salary? It's obvious. You can be in Nigeria and be working for a foreign or an international company that pays you salary in dollars. So some years before now, that would have been impossible. But nowadays, due to the impact of globalization, we have companies who have employees all over the world. So you can actually work for any company online, and you can actually earn dollars even while living in Nigeria. Secondly, you can earn dollars through profits by creating a business, and you can have business clients from all over the world who will actually pay you in foreign reserve, who actually pay you in dollars. So you can earn dollars through profits even while you're in Nigeria. Also, you can earn dollars through rent. If you have a property in the US and it's rented or commercial, so you can have people live there and then they pay you their rent in dollars. And then also you can earn dollars through interest. How do you do this? By buying government bonds, in particular US government bonds or other instruments like treasury bills and the likes. So US bonds are actually instruments of the United States government to borrow money from the public. And you can, as a Nigerian citizen, you can actually buy a US government bond and be paid interest in dollars. And then lastly, you can earn dollars through dividends. Dividends are money that are paid on stocks. So when you own a stock or a share of a company, then you get paid dividend. But mind you, dividend is not a compulsory payment, so the company can decide to pay you or not to pay you dividend, but at least you know that you have an ownership of the company. And even if you're not being paid dividend, then your interest in that company or your ownership of that company will actually be improving as long as the business fundamentals of the company is improving. So you can settle for capital gains. So seeing that your ownership is improving, and in the long run, you can always sell your position in the company and get the money. And that brings me to the end of this video. Please don't forget to subscribe, to like, and to engage with the content. Share, comment. I would really appreciate that, and it will really do a lot for me and for this video. So please engage, like, subscribe, just talk about it, share. I don't mind. I'll appreciate. And so till I cross your path again, stay safe and as always, say no to war. Peace.